Hey, good afternoon and welcome back everyone to our options webinar series. My name is Tony Zhang. I'm the chief strategist here at Options Play. And today we're going to spend our time talking about technical analysis, specifically how you can use technical analysis to find a trading edge. Specifically, we're going to cover the topic of trading with the trend. How can we use technical analysis and the tools that are available to you here at First Trade to find trend following trading setups that you can use, whether you're trading stocks or options, what tools you can use to scan for these types of opportunities. So here at Options Play, in terms of the education series that we host every other Wednesday at noon, we're here to help empower you and make sure that you have the tools and the education to trade sustainably and confidently so that you have a well-rounded education around technical analysis, options trading, as well as risk management and portfolio management that can help you grow your trading account over time. Now, before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that I'll be using as example purposes during today's session. So today what we're going to cover is we're going to start off by giving you a little bit of background in terms of my trading background. That's going to help set up kind of giving you an understanding of how we arrive at the strategies that we'll be looking at here today. We'll cover the difference between trend following versus counter trend, what the differences are. It might be obvious as to what the differences are, but it's also important to understand psychologically how it's different in terms of trading when you're following the trend versus counter trend. And then we'll talk about the strategy construction. How do you actually come across a trend following strategy and the specific indicators and parameters that we use to identify this specific setup for a trend following strategy. Then I'm going to show you how to scan for the exact opportunities that I'm going to show you today using Options Play before we open this up for Q&A here at the very end. But my goal here during today's session is to provide you with a proven strategy for following the trend. So we're going to start off with the foundational knowledge, how to create a trend following strategy using common technical indicators. So this requires just a basic understanding of technical analysis. And even if you're just starting out, I'll explain to you exactly which specific indicators and which specific parameters that I use for the indicators if you wanted to replicate this on your own. And specifically, what we're going to talk about is using those indicators for a directional edge, which specific indicators and parameters have been back tested to show strong performance. That's what we're going to hone in on during today's session, and specifically how to find those exact opportunities using the Options Play platform. So a little bit about my trading background. I've been a market strategist for 18 years. I've focused on both retail and institutional traders over that time, and I've worked with over a few thousand traders in my 18 years as a market strategist. And for those of you that may not know, I actually started my career back in foreign currency, FX trading. And that's really kind of where I honed the specific strategy that I'm going to be teaching you during today's session. At the time during 2007, right before the crash of 2008, trading E-mini futures throughout the crash, trading E-mini futures using this exact strategy that I'm going to be showing you. So this is a strategy that has been in my own personal trading toolbox for nearly 18 years. Started out with trading E-mini futures, and I've adapted the same strategy for trading stocks and options, as well as foreign currency over that time. And that's really some of in my opinion, the beauty of technical analysis is that you can apply the exact same strategy that you've learned from one specific asset class to other strategies and other asset classes as well. So it is by far the longest standing strategy that I've used in my trading career, and I've used it across, like I said, futures, forex, equities, and options. And this is the exact scan that I always set up whenever I look at any new tools. If I have a new charting package I'm looking at, if I'm using a new screening tool, if I'm testing out some type of trading software, this is always the first scan that I set up just to see how good a trading system or trading platform or research platform that I'm looking at, because this forms the basis of all of my trading. So what I'm going to be teaching you here today is something that has been with me for a very long time, and I'm very excited to share with many of you who, no matter where you are in your trading journey, I think many traders are always looking to hone their skills as to how to find, trading setups that make sense for them. So hopefully today I'll be able to share some of that here with you today. So generally speaking, when you think about trading ideas, right, when you're looking for ideas in the market, they generally fall into two general categories: trend following and counter trend. Meaning, are you trading with the trend or are you trading against the trend? Now, like I said, it's pretty obvious as to kind of what the differences are between those two strategies. But I think it's important to really understand some of the dynamics of trading each one, because some investors may feel more comfortable with one or the other. I think most people feel it's more natural to go with the trend. It's very unnatural to go against the trend. So let's talk a little bit about what are the pros and cons about each one. So let's talk about going with the trend first, right? So like I said, going with the trend, generally speaking, feels natural to go with the trend. And now, the generally speaking, when you're going with the trend, you tend to have higher probability of success. But when you're going with the trend, the risk to reward ratio on a trend following strategy tends to be moderate, but more people like it because it's natural to go with the trend and you generally have a higher probability of success. But it's important to understand what the trade-off is with a higher probability of success strategy is, and which is the fact that when you follow a trend, the very definition of following a trend means that the trend has already been established before you jump on the trend. And that simply means that you are not the earliest one to identify it, meaning you're already to some degree late to the game, right? Because the trend has already been established before you get into the trend. And that just simply means that your risk reward ratio may be decent, but it's not going to be the best risk reward ratio you can possibly get. Um, the other benefit that I tend to generally find with trend following strategies is that you can many times get consecutive signals that fire off, a few weeks apart, and you can kind of over a few months find 3, 4, 5 consecutive buy signals. And I'll show you some of the charts and the signals that have been generated where you get this kind of consecutive signal generation. So many times you can kind of trade the same security over and over and over again because it stays in a trend and it continues to trend. As long as it stays in that trend, you keep having opportunities to re-enter that trend or add exposure to that trend. So that's kind of the characteristics and behaviors that what you can expect if you're following the trend. Now, on the other hand, if you're going against the trend, this generally tends to be, at least for many beginner traders, tends to feel very unnatural to go against the trend. You see a stock that's ripping higher. It's very unnatural to say now's the time to short that stock, or vice versa. If the stock's been declining for months and months and months, and it just looks like the worst stock that you could possibly buy, it feels really unnatural to be buying a stock that's so bearish and where everyone thinks that the stock is going to continue moving lower. But that's really where you get the best risk reward ratios, because effectively what you're trying to do is trade the turn of a trend as early as possible. You want to be the first person to identify that trend before everyone else. And that's really when you can get the best possible risk reward ratio. Because, we all know the old adage of buy low, sell high. How do you actually buy low? You have to buy low when everyone else is selling, right? You have to buy low when the charts look so terrible that that no one else is thinking about buying. That's how you buy low, and vice versa. How do you sell high? You have to sell high when everyone is kind of jumping on board and there's a lot of hype and there's everything. The stock's going parabolic. You have to sell there, right? So when we think about buy low, sell high, conceptually we understand it, but if it's actually quite unnatural to buy low and sell high. But if you are able to do it, that's when you have the best shot of capturing the most amount of the overall trend while risking the least amount of trades. Now, When you have this very excellent risk to reward ratio, that tends to mean that you'll have a lower probability of success, simply because there are fewer triggers that will, come to fruition, right? There are just fewer stocks that are either severely overbought or severely oversold that you can find opportunities to buy low and sell high. Okay, so that's kind of a bit of a breakdown between counter trend and trend following. Today we're going to cover trend following, right? Going with the trend, how do we identify trading setups when we're trying to trade with the overall trend? So let's break down kind of a trend following strategy, because there are, call it, three steps to trigger a trend following strategy. First, what we need to do is identify a primary trend. So this is basically the larger trend of a stock, right? A stock kind of will oscillate, and there's a lot of noise on an intraday basis, but over a period of time, when you look at it over a few weeks or a few months, generally speaking, you identify somewhat of a trend. That could be trending higher, it could be trending lower, it could be trending sideways. But the idea is to identify a primary trend. And what you generally want to do is you want to use a longer period momentum indicator to go about doing this. You can use any momentum indicator: RSI, MACD, stochastics, commodity channel index, Williams percent R. There are dozens and dozens of momentum indicators. They all measure the same thing. They're just different mathematical calculations to measure the same thing. Now, most indicators in terms of momentum will use somewhere around a 14 period to 20 period as a default starting point. You generally want to use something longer, something in the 30 to 50 period time frame. And what that's going to help you do is identify the longer period momentum, right? The second thing you want to do is you want to look for a counter trend to that primary trend. So what you're basically saying is that as a stock trends higher, right, you want to look for dips in that trend in order to kind of buy that dip and wait for that continuation of the trend. Okay, so what you're looking for is you need to first identify a primary trend. The second thing you want to identify is a counter trend to that primary trend. And then what you're looking for is for a continuation of that trend higher. Those are the three steps that it takes to identify a trend following strategy. So easy enough conceptually to understand. Now let's break down how do you actually go about doing it, what specific indicators to use, what parameters to use in order to capture this specific move. So what I'm going to teach you is the specific set of indicators that I learned 17 years ago to identify this specific trading setup. And it requires two indicators in order to do it. It uses the exact same indicator, but using two different time frames. So the first one I'm going to use is a long period momentum indicator. So that's depicted with a red histogram. And for the long momentum indicator, what I use is a commodity channel index, sometimes referred to as a CCI. That is a long period momentum. I use a 50 period CCI. The default CCI indicator uses 14 periods. What I'm going to use is 50 periods. I'm basically looking back much longer to identify my overall primary trend. So if you look at the red indicator on your chart, what you see here is that from this date to this date, it remains positive the entire time. Meaning what it's telling me is that from this date to this date, momentum remains positive. It really turned from negative to positive on this specific candle right here, because as you can see, that the red indicator flips from negative to positive on that candle, and then it stays positive the entire time. And that's really the goal of the long period momentum indicators, to help me keep an eye on the bigger overall trend, right? And it doesn't get swayed by small, pullbacks here. It doesn't turn negative. These small pullbacks don't turn negative. It basically keeps the view that the long-term trend here is bullish this entire time. And that's what the long period CCI, or long period momentum indicator, is meant to do. And then what we said is, once you've identified a a primary trend, right, which in this particular case is a bullish trend, what you're looking to do is you're looking for a short period momentum indicator to go oversold. And that's what the blue indicator is. The blue indicator and the red indicator is using the exact same indicator. The only difference is that the blue indicator is only looking back 5 periods, right? So one is looking back 50 periods, one is looking back 5 periods. And I use different, I use a histogram for one and a line for the other one just to differentiate the two and make it easier visually to see the two, okay? And basically what I'm looking for is when the short period momentum indicator turns back into oversold, meaning it's oversold, and generates that buy signal, that is the trigger to actually buy the security, okay? So what I'm identifying is a long period a primary trend, which in this particular case is positive. And what I'm waiting for are kind of counter trend moves to that primary trend to trigger the actual buy signal. And what I'm trying to do is basically capture as much of this move as possible. And what I want to try to do is to buy it at the very bottom of the counter trend move for that move higher here. And this specific set of indicators that I'm showing you here, specifically using the 50 period and the 5 period CCI, which is again the commodity channel index, as you can see, triggers the signals very close, if not always, at the very lowest bottom candle, right? Notice how good it is at triggering, kind of these moves and buying it at very much the bottom of these candles or these counter trend moves and capturing as much of that next move as possible using these very specific set of indicators that I use in my trading. Okay, and that's why this is the one specific set of strategies or one specific strategy that I have carried with me for the last 17 years in my trading. To identify these types of trading setups because it's so successful at identifying these very specific kind of counter trend following strategies. So once I've identified an overall trend, how can I continue to find opportunities within this bullish trend to kind of get into this trade, get into the trend at the most optimal time, right? Because if I enter on this specific candle, right? If I enter here on this specific candle, I can set a stop pretty close to, right below that candle. So if it kind of goes right below that, I'm risking very small amounts in order to take on this trade relative to the amount of potential reward that I have on each one of these trades. So the goal here is to try to buy as close to this specific bottom candle as possible. And as you can see, if you use these very specific indicators, you tend to buy very much either at the bottom candle or very close to the bottom candle, okay? So what you're looking for, that's the first part of the strategy, right? It uses two indicators and uses one specific trigger using the short period momentum indicator to trigger the buy signal. Now, here's the thing, is that if you were to use just these two indicators, using these three parameters, right? Using the long period to identify a primary trend, using the short to identify the counter trend, and then use the short signal, the short indicator to generate that buy signal. If you were to use only these three indicators every single time, this strategy, unfortunately, actually doesn't perform that well. Okay, so I just want to be very clear about that. If you only look at these three things and nothing else, it's not going to perform that well. What you have to do is a little bit of research prior to when you're going to do it, right? What I mean by that is you have to look at the price action of the stock before you trigger this specific signal, because many times what you're going to see is that a stock might just be trading sideways, right? And what you can find is that there are still opportunities to buy this, even if it's trading sideways. So for example, here's a good example of this, right? Momentum here is positive, and this generates a buy signal. But notice how, this stock has really been range bound for quite some time, between 69 and call it 64, 65, right? So this stock has been range bound kind of this entire time. Now, remember, this is a trend following strategy. So when the stock is not trending, don't use this specific set of strategy, this specific indicator, right? Or this specific strategy. You have to wait for the stock to actually break out of an overall trend, which happens on this specific candle here, right? Where, this stock has been trading sideways for quite some time. And here it breaks out above its resistance level. That's the first indicator that, hey, perhaps a new trend is starting. Let's look at trend following strategies. And only when that happens do we have this specific trigger, right? So this is really kind of where we go back to, okay, now that this stock has broken out from its sideways trend and it looks like it's about to start a bullish trend, now when we got this pullback here to the support level, that's really when the first trigger it was generated. This is the same chart from the previous slide that I just showed here, right? The first signal is generated here, which gives us that first move. And then we start to get the second signal and the third signal and the fourth signal and so on and so forth. But you have to first identify that from a price action perspective, that the primary trend makes sense, right? Otherwise, what you end up doing is you're just going to end up getting chopped back and forth in this, and you're not going to be particularly successful. So not only do you have to be able to read an indicator, you also have to just generally understand, looking at a chart, whether the trend makes sense or not, right? You have to first identify the start of an overall trend before you can follow the trend, okay? Hope that makes sense to everyone. Now, once you have that identified that trend, what you're looking for is that counter trend move. And then lastly, even short-term momentum can help you offer that kind of exit signal. So what you can do is you can use the blue line. When the blue line and the red line kind of gets overbought, when the two combined get overbought, that's also a potential opportunity for you to exit the specific trade. So not only can these indicators provide you with the entry, but it can also help you identify potential exit points for the trade. So when the long and the short period momentum indicator kind of move to the opposite end of the spectrum and they're both overbought, that's usually an indicator where you can start taking some profits, if not all profits, on your trend following trade. Okay. So, and then lastly, how long do you follow this trend for? Can you follow this trend indefinitely? And the answer is there are some signals that you can look for that tell you that the overall kind of, the overall bullish trend here is starting. So here we said that this is kind of when the bullish trend starts, right? This is when the momentum indicator turns positive. But we also said that it really is on this specific candle here when the actual bullish trend starts, right? So let's call this specific signal when the bullish trend starts. When do we count this bullish trend as sort of ended, right? Those are some of the things that we typically look for. Well, what we typically look for is divergence, meaning the price action makes higher highs, but the long period momentum indicator is making lower highs. That's usually a good sign that the bullish trend that we've identified is coming to an end, that's exhausted to the end, right? Sometimes it doesn't identify the very top and it can still continue above that, right? But even when that happens, what we tend to find is even more divergence, higher high in terms of price, lower highs in terms of momentum. And as you can see, that's a sign that this bullish trend here could be coming to an end. So you can basically continue to trade setups here. So this is one signal, this is two signals, this is a third signal, this is a fourth signal. By the time you get to that fifth signal, that's really, you're at a point where you're pretty clear that this trend is starting to get exhausted, and I would not take that fifth signal, right? So what you've gotten is 4 clean, good trades out of it. By the time you got to the fifth one, it starts to look a little dicey, right? And then when it kind of gets back to this point, right, you could potentially say that that's another valid one and that's another one. If you're really aggressive with your trading, you could potentially do that. But then by the time you get to here, right, you got further exhaustion here, and I would basically not take that. So for example, this is a good trade of one that I would not take, because right prior to that, what we start to see is that divergence. I would not take that last signal. As you can see, if you did take that last signal, which would have been a buy signal here, right, it would not have been very successful because it very quickly started to deteriorate here as well. So these kind of warning signals that you get from the long period momentum indicator that diverges from the price is usually a good indication of this bullish trend that started all the way back here is starting to come to an end, and we should not continue to try to follow a trend that's clearly in its last stages of exhaustion and potentially ending that trade. So those are the general dynamics and rules of this specific trend following strategy. Okay. So now that you've kind of learned the ins and out of this specific strategy, the reality is that it takes time to actually do all of the work that I just showed you. You got to pull up the 50 period CCI, you got to pick up the 5 period CCI, you got to think about all the rules that I just told you about in terms of identifying the start of a trend, waiting for the specific setup to happen. So one of the things that we did is we built these specific scans directly into options play so that you don't necessarily have to do all of the work. It's important for you to understand the strategy, right? I hate, rather, I don't encourage traders to trade something when they don't understand the strategy itself, right? If I just said, hey, here are some great trend following scans built into options play, go and trade it, and you don't really understand it, that's when you tend to have less success with it, right? But when you really do understand the overall strategy, meaning you understand why it works, I showed you when it works, when it doesn't work, and you really understand it, that's when you're able to be very successful with it, right? So that's why I take the time to dissect the strategy, walk you through the specific indicators, walk you through the different scenarios, when it works, when it doesn't work, when to trade it, take the signal, when not to trade it, take the signal. And then what I can do is I can show you automation so that kind of our tool automates finding these signals for you so that you can quickly find these opportunities in your trading account. So we have it built into options play, which you have access to with your first trade account. Under the ideas section and technical ideas, you can filter and sort those specific ideas. And under the scan category, you have CCI rally and bearish trend, and you have CCI dip in bullish trend. This is basically the bullish and bearish version of the scans of the specific trading strategy that I just showed you. What I generally do is I will take out stuff that's not liquid or somewhat liquid and only look at strategies that are very liquid, right? So under trade ideas, under technical scans, you can sort and filter for these two specific scans, CCI rally and CCI dip. And then if you just remove the not liquid symbols and somewhat liquid symbols, that gives you a pretty good sense for the strategies that you might want to look at for that given day. So let's take a look at the options play platform. And what I generally like to do is once I've made my filters, right? So let me look at all trading strategies. Once I filtered out not liquid and somewhat liquid, the two scans that I'm looking for is CCI rally and CCI dip. Those are the two screens that I'm looking for. And then as you can see here for today, I have 52 ideas that fit the, either bullish or bearish trend following opportunities. But what I like to do is I like to sort it based on relative strength. So what I'm looking for are relatively weak stocks, strengths that have probably 5 and under for bearish opportunities, right? So as you can see, you have a lot of these kind of 2, 3, 4 strength stocks. These are bearish opportunities, and I'm looking for bullish opportunities. I tend to look for stuff that has higher strength, right? So 8, 9s, and 10s, which is, you can see there's a lot of that, right? And basically you can click on any of these, and what it does is it scans for that specific indicator, so that specific setup that I showed you here before, right? What you're looking for is a stock that has a clear bullish trend, and what you're looking for is a pullback in that bullish trend, and you're looking for that continuation. So this tool basically scans for that specific scenario for you and lets you know which stocks have met that specific criteria. Okay, so let's look at a few other ones. Let's look at, I want to look at ones that are kind of where the price of the stock is not $1,500. Let's look at Taiwan Semiconductors. You see a lot of semiconductor stock that over the past few trading sessions have taken a pretty big hit. And that is kind of that buying opportunity, right? A lot of these semiconductor stocks have been in a very strong bullish trend. And recently we've had a bit of a pullback here, which presents that buying opportunity, which is why today you see a lot of, SOX, which is the semiconductor ETF. You have NVIDIA here, you have Applied Materials, ASML. These are all semiconductor stocks. And if you look at the chart here, they look almost all identical, right? They're just stocks that have been very strong over the past few months. Recently, alongside NVIDIA, have pulled back here and presents that potential opportunity to be a buyer here and continuing that bullish trend. You have Taiwan Semiconductor. Let me find someone that's maybe not in that specific class of stocks. Actually, a lot of them tends to be semiconductor stocks here today, and not too surprising that you see, a lot of semiconductor stocks that kind of fall into that category here. Lam Research, really a lot. SMH, which is the semiconductor ETF. Trade Desk is not a semiconductor stock. Let's take a look at Trade Desk here. So this one, as you can see, is not as strong in my opinion, right? I would say the overall trend is it is trending higher. That is true, but the trend higher here is barely trending higher here, and you get a pretty small pullback here. So this is a good example of one that when I look at this particular chart, it's not that encouraging, and this is not one that I probably would take. But most of the other semiconductor ones that I just showed you here do look pretty good. Let's look at Hewlett Packard Enterprise. Let's take a look at that. This is a pretty good setup, right? You have a clear bullish trend, a big pullback here, and a potential opportunity for that to continue. So if you look at these, Costco, here's one that's not a semiconductor stock. So Costco has been on a big tear recently, right? This was a $700 stock, $850 stock, 875 just a few days ago. It's pulled back here to around 850 or so, just below 850. And we're looking for that continuation higher here. So, as you can see, there are lots of opportunities. Many of them are the same, right now, in terms of the semiconductor stocks for the bullish trades. Now let's take a look at some of the bearish trades. Let's look at D.R. Horton, housing, home construction stock, right? So here is a stock that is, this is where the trend is also not as clear, right? This certainly is trending lower, but I would say, over the past month or so, it's kind of more sideways than trending lower here. And you've got a bit of a rally here, a small rally, very small rally, looking for that continuation lower. So, this is an example of one that, depending on how strongly you feel about this specific industry or this specific stock, not as crystal clear as some of the setups that I'd like. Let's take a look at maybe Dollar General. I'm looking at these stocks for the first time, just like you are, right? Dollar General, as you can see, clear bearish trend, right? And what you're looking for are the kind of these rallies to sell into, right? And you've got another rally here recently to sell into. And that's exactly the type of trade setup that we're looking for, right? You can draw your lines this way as well. You can kind of draw support and resistance lines. You've kind of retested that resistance line and you're looking for that continuation lower. Let's look at Pepsi. Some of these stocks, I haven't really looked at these charts recently. Pepsi also, as you can see, kind of trading sideways, but over the past few weeks, you have seen kind of a pretty clear downtrend, right? And in that downtrend, what you're looking for are these short-term rallies to sell into. And that's exactly what you've gotten recently, a short-term rally to sell into. Not as crystal clear because there's clearly a lot of major support here, right? So maybe this kind of just targets here and it could bounce back. Hard to say. I have to do a little bit more research within that specific industry, consumer staples. BorgWarner, clear bearish trend. Recently had a bit of a rally here, small rally here, and looking to continue that move lower. Let's look at UPS. UPS, a big move up higher here today, so maybe it might not be the best opportunity here. So UPS, this is an interesting one, right? So you have a recent breakdown, which is kind of the potential start of a bearish trend, and it's retested this resistance level. This is the third time it's retested that resistance level. Hasn't quite moved lower here from ever, even though it's tested this resistance level 3 times. So in my opinion, probably not the best trading setup because this looks really more of like a sideways trade than a bearish trade, right? So, but technically it meets all the criterias of that trade, which is why it gets triggered. But this is really where you just have to do a little bit of homework alongside with these. But the idea is that we've narrowed down 8,000 stocks down to just 50 opportunities. And these are all trend following opportunities that you know that you can trade. And if you just do a little bit of homework, you can try to identify kind of the best trading setups within this. No algorithm is going to be able to find you, the only, trades that are valid, but this kind of takes out the vast majority of the homework for you. Kraft Heinz, clear bearish trend here in terms of Kraft Heinz, broke below a support level here and broke below support, rallied back to a resistance level. That's the rally that we're looking to sell into, and now we're potentially continuing lower. This is a really good example of kind of a setup that looks quite good, right? You have bearish trends that started here, broke down below a major support level, and now it's kind of continuing to move lower. This is a great example of capturing the start of a bearish trend early on. Let's look at Block. A clear bearish trend, certainly, right? I would say there were a lot of rallies in this particular kind of move that you could potentially have sold into, right? This one, what you got is a small one. I would say this is already pretty late into the overall trend. Note here that you've kind of got lower lows, but momentum is already kind of confirming some of those, not confirming those new lows. This is one that I'd probably avoid because I'd say that you're probably already pretty late to the trend, even though technically this is a valid signal. It's already pretty late into the trend, as you can see. The 1 month trend turned bearish all the way back here in April, mid-April, right? And we're already at the end of June. So I'd say you're pretty late to this trend. This is one that I probably would not take. JB Hunt. Once you get to the strengths that are ones, you tend to be already pretty late to the game. So, I tend to look for the fours and fives. Those tend to, in my opinion, sometimes the better ones because those you're not too late to the game, right? So here's a good one. This is probably not the best trading setup, right? Basically you had what looked like a bullish trend. Whoops, let me kind of bring this back. What this looked like it was start of a bullish trend, but that clearly failed and it's kind of turned back here. You've got a small rally here and this might continue moving lower. That's a possible one. I'm not as thrilled about that one, but this is really where you can look through some of these names and quickly identify trading setups without having to do a lot more homework here. This one, as you can see, there's quite a bit of support here. There's a bit of support here. Probably not the best trading setup either. Yeah, so as you can see, I'm looking at all of these charts at the same time that I am with you, and I've been doing this for 17 years, so it's a lot easier for me. But by going through as many examples as possible, I kind of show you what I'm looking for, where there are some good setups, which ones I would tend to avoid. This way, I'm trying to impart that knowledge to you so that you can also follow along. You can go into your first trade accounts, look for these trading setups, look at exactly what I'm looking at and seeing, which ones you would trade, which ones you wouldn't, and really take the time to look at some of the charts that I shared with you here today. And that's going to help you become a better trader. Once you get used to looking at these charts, you will within a couple of seconds identify where there are some of the best opportunities to trade some of these ideas. So with that, that covers what I wanted to share with you here today. What I'll do is I'll open this up for Q&A. There is a Q&A window at the bottom of your screen. Any questions that you might have regarding the strategy, the technical indicators, the options play platform, please feel free to type your questions in the Q&A window, and I'll try to answer as many questions as possible. Any books you'd recommend to learn more about options trading? So there's a great book, if you're a complete beginner, the Options Playbook, which has both a hard copy that you can buy on Amazon as well as a Kindle version, I think are good starting points for a lot of traders, by Brian Overby. It's called the Options Playbook. You can find that pretty easily on Options Play. Can you show again how you launch the Options Play window? Sure, there's a lot of places that you can access Options Play. So when you go to your First Trade homepage, there is a button here that says the Options Wizard directly from your home page that will launch Options Play. You can also go to the Options Trading page. Oh, whoops, looks like I got logged out here. 1 second, let me get myself back in. So when you're on the trading options trading page, you will also see the options. Whoops! You will also see the options wizard button here on the right-hand side. Those are probably the easiest place to get to the options play platform. You can also go to research and tools to options. But that will only take you to the options ideas that we generate. So the best places to go is just your home screen. I think home screen is probably the easiest thing because everyone is on their home screen. As you can see, there's an options wizard button here that if you click on that, that will launch the options play platform. What is success rate for the CCI strategy? So if you take every single signal, meaning you don't do some of the filtering that I just talked about here, right? Where you wait for, the price action confirmation and you just take every single signal, no matter what, even if you're very late to the game, the hit rate is about 60%. That's based on back tested results. But like I said, if you actually apply some of the filters that I just told you about with regards to waiting for price action to confirm the actual bullish or bearish trend, and then you also avoid kind of entering the trades when you're really late to the game, you're approaching 65, 68% win rates on those types of trades. That's based on 15, 16 years of back tested history. What is the most important thing for options trading? That is a pretty big and generic question to ask. I would say that from my perspective, I think the biggest thing for options traders to do is to learn a couple of strategies first, right? So learn a couple of uh, basic strategies and then maybe a couple of more complex strategies, and really understand what are the best practices for those specific strategies. Meaning, if let's say you're going to be buying call options, for example, right? What are the best practices for what expiration dates to generally use? What strike? How do you choose your strike prices? So that you're more consistent in your options trading, right? So every single time you identify a bullish setup or a bear setup, you're using the same type of call options or the same type of put options every single time. And then if you're trading more complex strategies like debit spreads or credit spreads, understand generally speaking, how far out you want to go in terms of expiration, what specific methods to choose strike prices so that you consistently apply the same strategy to every bullish setup that you find and the same strategy to every bear setup that you find. That's how you're going to get more consistency in your trading and success in options trading. Can you please show again the filters that you selected? Sure, it's in, here, I'll show it to you on this. So what I'm looking for is I remove the liquid and somewhat liquid liquidity, and you're looking for these two. Whoops. you're looking for these two specific scans, CCI rally and CCI dip. Those are the two scans. That's the bullish trend, the bearish and bullish trend following scans. And like I said, I remove kind of these two from a liquidity perspective. So I'm only left with, stocks that I can trade options on, the very liquid symbols. Should I avoid stocks that keep going sideways or in decline based on trading pattern trend? Yeah, you definitely want to avoid stocks that are trading sideways because you can't follow a trend on a sideways stock. Thank you. You got me excited again about options. I love it. Great, Jill. I'm glad that I was able to inspire some of you to look at, technical analysis and options trading again. What's the most basic option strategy beginner can study? Well, I mean, cover calls is certainly the most basic, or rather the most beginner option strategy, but it's more of an income generating strategy and not directional in nature, right? So you don't sell cover calls when you have a directional view on a stock. You generally just sell cover calls all the time for income. I think the first directional strategy, the most basic directional strategy would be buying a call and buying a put. Which is suitable for what we're discussing for today's session. So if you've identified a bullish trading setup, how do you actually go about trading it using a call option or a put option, would be the basic option strategy you would use for that. Block looks like it has bullish divergence. Can you show if it's a good buy for bullish? Let's take a look at block. Question was that, is it a good buy? So, potentially, right? I don't usually think about buying counter trend unless I also have a fundamental thesis. What he's referring to is the fact that you've got lower lows in price, higher lows in terms of momentum. That's considered what we call positive divergence, right? And that's usually a sign that this bearish trend is coming to an end. Now, bearish trends coming to an end does not necessarily mean a buying opportunity. It just means that the bearish trend is coming to an end. That means that it could be going sideways. It could bounce higher, right? But it's not necessarily saying that it's going to bounce higher. Now, I don't typically buy any type of counter trend moves like this unless there's also a fundamental thesis behind it, right? I haven't looked at block for a while here. It's trading at 82 times earnings, which is, relatively high, but I mean, I usually look at forward PE. So I have to look at kind of what are expected growth rates, what are margins. I have to have a strong fundamental thesis to be quote unquote buying low, right? Meaning if I'm going to go against a trend, I'm going to go against the trend because not only does the technical chart agree with me, but also the fundamentals agree with me as well. So I just haven't done my homework on Square or Block on the fundamental side. But if you have done that work, then I would say yes, this does constitute as a buying opportunity for a counter trend trade. You're going against the trend. This is clearly a bearish trend, but there are some of the signs that that bearish trend is coming to an end, notably the positive divergence that you talked about. And then if you can align that to a fundamental thesis, maybe the stock is trading at a relatively reasonable valuation or cheap valuation. That is typically what I would be looking for if I'm going to be trading counter trend. As far as the recording, please, contact your First Trade representative to help you get access to this recording. How to choose the expiry date. So we have hosted a lot of sessions on specific option strategies and the best practices for each one. So I encourage you to go back and review some of those webinar recordings where we talk about the best practices for each individual strategy because it does differ from strategy to strategy. There's no generic kind of overall one that you would use for picking expiration dates. So please kind of find the specific strategy you're looking for, and then we kind of teach you the specific best practices for each strategy. With that, looks like we're coming up to time here. I hope that this was helpful in giving you a better understanding of one specific trading strategy that you can use to help identify high probability trend following setups. Like I said, this is the one strategy that I've used in my portfolio for the longest time. There's a reason that it's stuck with me for such a long time because of how successful it is over such a long period of for so many different asset classes and so many different market conditions, which is why I'm really happy that I can share this with you today and specifically show you how you can automate it using the Options Play platform. So with that, thank you so much. I hope you guys all have a great trading day, and I'll see you guys here Tuesday morning on our next macro outlook session. And then we'll be back here in 2 more weeks with our next options education session. Thank you so much and have a great trading day.